businesses do for the relief if they can't get into Mar-a-Lago?
Again, sir, small business confidence is up. And we are seeing that the one big beautiful bill gives the full expensing for equipment, factories, and ag structures.
They are telling us that it's more expensive to make basic things. We are moving in the wrong direction. The facts don't lie. The president lies often, but the facts don't lie. In fact, if you're saying we're at the beginning, basically your answer to those small businesses is wait a little while. Is that the answer? That a year from
you ask about manufacturing.
That's right.
So
I'm asking you,
and I am saying
I'm asking you about this manufacturing boom. Will we see something different a year from now?
We are going to see it. I was just in my home state, Senator Scott's state, South Carolina, that we are seeing a boom there. And I believe Georgia has very good pro-business policies. I'm sure you will see a boom there also. The factory build intentions are quite high.
I'll tell you what I see. I see, as I talk to folks, that it's more expensive to build things in America. I see that we've lost 72,000 jobs a year into this administration. We've lost manufacturing jobs every month since he called for Liberation Day. And meanwhile, folks who are working in these small businesses trying to make their lives work, they're seeing higher costs. They're seeing their costs go up for groceries. They're seeing their costs go up for electricity. They're seeing their costs go up for healthcare. And I think the American people are still waiting for a solution. So far, we haven't seen one coming out of this Trump tariffs regime. The Baptist preacher is done, and I have no time left. Thank you very much, Mr. Secretary.
Inflation.
Senator Ricketts.
Thank you very much, Chairman Scott and Ranking Member Warren for this hearing, and Secretary Bessent, thanks very much for being here. Appreciate it.
Good to see you, Senator.
Good seeing you. And I want to thank you and commend you for updating the 45Z clean fuel production credit. That is very important. So thank you very much for getting that out. Your guidance incorporates what we put in the Working Families Tax Cut. Remember, that's how we rebranded the One Big Beautiful Bill, and supports Nebraska farmers and biofuel producers. So that's really, really important. It also ensures that feedstocks from faraway countries will not be allowed to get that credit, which means American taxpayer dollars will stay here in America. That was very important. So Secretary Bessent, appreciate that. Also want to just comment on one of my colleagues from the other side of the aisle talking about the ag economy. I would note that under the Biden administration, we had 4 years in a row of agricultural trade deficits, because the Biden administration was the first administration, going back to Jimmy Carter, not to sign a major trade deal. And that is one of the reasons why we have such a hard problem, or a hard time right now in the ag. And in fact, when talking about input prices, under the Biden administration, June of 2022, diesel hit $5.75, now it's at $3.52. So again, we need to address the issues to help our farm economy out, but a lot of the seeds of this was started in the Biden administration. I also want to thank you for presenting FSOC's 2025 annual report. In that, one of the things that perhaps you already touched upon, and if I'm repeating myself, please forgive me, or repeating what's happened, or forgive me, but the Biden administration, under the Biden administration, then Secretary Yellen, actually undid all the good work of the Trump administration in 2019's FSOC when they changed the activity-based designation guidance. Yellen replaced it with her own guidance that was turning a last resort safeguard into a tool that could be weaponized and stifle innovation and restrict access to capital that would grow our economy. A little over 2 years ago, I sent a letter to then Secretary Yellen about how the 2023 entity-based designation guidance was misguided, lacked evidentiary support, and increased the likelihood of market distortions. Secretary Bessent, do you agree with the characterizations of the 2023 guidance that could do all these things, could cause market distortions?
I believe in the activity-based guidance, and we are moving back to that, Senator.
Great.
And Senator, if I could just point out that FSOC under Secretary Yellen, 2 weeks before the three of the largest bank failures in U.S. history, many of them due to bond market portfolios, identified climate as the biggest risk to financial stability. They had not over-leveraged bond portfolios.
Seems like misplaced priorities given a financial service sector. Secretary Yellen rolled out her new guidance, and then she stripped out the cost-benefit analysis of it. In your view, does cost-benefit analysis matter in evaluating to use FSOC's SIFI designation authority?
Again, sir, without that, why would you do it?
What is your view on the activity-based designation approach that was developed through the transparent and methodical process done in 2019?
We are readopting it, and we believe it is fulsome, robust, and smart-minded.
Great. Thank you very much, Secretary. Thanks to President Trump's leadership and your steady hand at the Department of Treasury, the United States economy is doing very well. I think the GDP growth in the last quarter, third quarter, was 4.4% annualized in 2025. Labor markets remain resilient. The unemployment rate is 1.2% below historical average. Inflation is down from the highs of the 40-year high in Biden administration, decreasing some 70% from the peak in the Biden administration. American markets are strong. We saw the largest tax cut in history signed into law, allowing us to avoid a $4.2 trillion tax increase. We've got no tax on tips, no tax on overtime. 88% of seniors will not pay federal income tax. The average refund is supposed to be $1,000 higher this year. And the average Nebraska family will avoid a $2,400 tax increase. Yet, despite all this progress, we're seeing consumer confidence is not really rebounding the way that the economy seems to be. In your opinion, what more can we in the Senate be doing with regard to consumer confidence and making, obviously we had 40-year high inflation under the Biden administration, but what more can we be doing in the Senate to be able to help out with confidence of consumers?
Other than telling consumers to turn off MSNBC, because a large part of it is a survey problem where Democrats vote very low, Republicans are more realistic, and then we end up what we're seeing.
Senator Kim's time. I appreciate your comments, but
yeah, thank you.
and by the way, for all members, they're going to close the vote at 12:05. So,
Okay.
just let
Thank
know
you,
that.
Chairman.
Started 10 minutes ago.
Thank you, Secretary, for coming on out here. Just the other week, you took part in talks with Russia. I guess I just wanted to ask you just your view of this. Do you agree that Russia's invasion of Ukraine was illegal and a violation of sovereignty and law?
Senator, I've been saying that since my confirmation.
That's right. Also, would you say that Vladimir Putin is a war criminal?
I've also been saying that since my confirmation.
Now, before you started, Treasury regularly targeted hundreds of actors and networks who sent critical goods to Russia's war machine with rounds of sanctions every 1 or 2 months. The previous administration added about 297 China-based entities and individuals to our sanctions list under the Russia sanctions program. I want to ask you, do you know how many you have added and designated as part of the Russia sanctions program since you came in as Treasury Secretary?
I do not, but I do know that President Trump sanctioned Rosneft and Lukoil, which was the major sanctions achievement, and dwarfs everything else, and has brought the Russians to the table for the talks that I was at last Saturday.
And you'll have bipartisan support for those sanctions, but I'll just say that there is also bipartisan support on doing everything we can to crack down on Russia's war machine, not just on the energy side. And so, as I said, the previous administration has added 297 China-based entities. This administration has added 0. That is the number 0. So I just urge you.
The previous administration was extremely weak on sanctions, and it was on record as saying that they did not want to increase energy sanctions because they were worried about the midterms, worried about the failed election of Vice President Harris, and in a display of cowardice.
I'm not asking you about that right now.
But on the way out the door, Jake Sullivan raised some of the energy sanctions. President Trump took the most bold action. So we have done more.
I'm asking you here, can you commit to this Congress that you will take action to sanction Russia's shadow fleet?
I will take it under consideration. We will see where the peace talks go.
I see how this administration has taken this maximalist approach, adding pressure when it comes to Iran's shadow fleet, talking about cutting off Venezuela's ships. I think that there needs to be consistency here. And again, there is bipartisan support for this. I wanted to just switch gears. Would you agree that money laundering is a national security threat to this country?
Yes, sir.
Now, with Binance founder Zhao pleaded guilty to violating anti-money laundering laws and was sent to prison, Binance then injected billions of dollars into Trump's family business, World Liberty Financial, and Zhao asked for a pardon and received that. I just wanted to ask you, is that a conflict of interest in your opinion?
I am unfamiliar with any of that. I wear many hats. The pardon hat is not one of them.
I'm just asking, do you see it as a conflict of interest, though?
Again, I'm not going to respond to that.
When you had the Russia talks, was Jared Kushner a part of the Russia talks?
Yes.
What is his official role in the U.S. government right now?
I believe that he is a special envoy.
So you believe that he has an official position and that is not a unpaid volunteer position?
Sorry, I believe that it is not an official position, that he is designated as an interlocutor as we bring many people into the talk.
I just raised this because this is the problem that we're seeing right now when it comes to these conflicts of interest. We see the Trump family getting involved in different roles, even though they don't have official positions. We see Pakistan now announcing that they're going to use Trump's family's companies' crypto for cross-border transactions and trade. Does that not concern you?
Again, I'd be especially interested to hear if you have any information of why Mr. Kushner is conflicted in the Russia talks.
Look, what I'm saying is that if he wants to participate in that, he should go by the same financial disclosures and getting rid of conflicts of interest that every other senior government official, including yourself, have to go through. And look, I'm just saying that when we're seeing Trump pardoning Binance founder Zhao, when seeing instead investigating Jerome Powell, when we see that Trump is now suing the Treasury and the IRS for $10 billion, he even said, I am supposed to work out a settlement with myself. That's what Trump said. Do you think that that is a conflict of interest?
That is a Justice Department issue.
No, it is suing your department.
The Justice Department represents Treasury. I would suggest you contact Justice.
With that, I yield back.
Senator Kramer.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for being here. And let me say, I'm sorry you're no longer a North Dakota farmer. You were a good one, and we were sorry to see you go. So I'm going to really shift gears here and talk about something that truly is bipartisan, and that is the adoption tax credit. And I know you wake up every morning thinking about it, but and I'm just going to ask you to look into it for me. But during last year's Working Families Tax Cut, the reconciliation package, we took a version. We altered the adoption tax credit a bit to include making it partially refundable up to $5,000. And previously, up until 2011, there was a refundability of part of the credit. The adoption tax credits always had this carry forward provision that allowed, of course, families to carry over unused portions into the next tax liability. Our intent in the Working Families Tax Cuts was for the carry forward to be eligible for the $5,000 refund as well. And the JCT actually included that in their score, again, which sort of validates the intent of Congress. However, the IRS is interpreting the language to mean that the carry forward is not eligible, affecting, of course, the adopted families from 2020 through 2024. What the IRS did is they interpret the effective date of December 31st, 2024, the same way Congress intended. But there's a big difference now between Congress's intent here and the IRS's interpretation of it. I don't believe it was the administration's intent to make this what I believe to be a mistake when the president signed it into law. So I just wanted to bring it to your attention, mostly to highlight it and then to see if you'd be willing to look into it for me.
Senator, I believe you're referring to the section 7402. And my tax office is very happy to work with your staff.
I look forward to that. And the underlying bill that created this language is very bipartisan. Our colleague, my good friend Amy Klobuchar, and I co-chair the Adoption Caucus, or the coalition, and work on these things closely together. So we'd love to work with you. Okay, on another matter, yesterday, in the House, my friend and colleague Bill Huizenga, Congressman Huizenga, talked to you about the 3% budget resolution bill that he has. I'm leading that resolution over here in the Senate. The goal of it is to establish the goal of reducing the federal deficit to 3% of GDP. Now, you referenced in your opening statement, I noticed that it's already been reduced somewhat to 5.4%. And one of the ways we can grow out of a deficit, or we can get out of a deficit or reduce a deficit, is by growing out of it. But I'd like to work on both sides of the ledger with you a little bit, because you have said that we don't have a revenue problem, we have a spending problem, and I absolutely 100% agree. So maybe you could just speak for the remaining time, although I would love to translate productivity sometimes as a result of efficiency, which might be a little bit of a workforce challenge, but that's another whole longer story. But speak a little bit to that goal. Is 3% by 2030, which is what our resolution do? Is that realistic?
So, Senator, my target is for something that begins with a 3 by the end of President Trump's term. As I said, for calendar 2024, we're at 7%, the highest when we weren't at war, not in a recession. We're at 5.4, and what friends from the other side of the aisle don't, the tale of woe and gloom. We have, on the past 3 quarters, we've averaged 4.1% GDP growth, and we had a fiscal contraction last year. They brought down the spending, which was one of the reasons our bond market did well. So we're at 5.4, and as we move that down, we will see the economy improve, and everyone could go to the Treasury website or the X account. I'm old school. They can go to the X account, and they can see a study by MIT that shows that the budget deficit that was blown out in 21 and 22 created the great inflation of 22. So as we bring down government spending, it will bring down rates and bring down inflation.
And at the productivity growth levels we're at right now, I mean, who knows how quickly we can get out of it.
I think we're in an exciting time that could be like we saw in the 90s.
I agree with you. We're at the beginning of the boom. I yield back 2 seconds.
We'll take them. Thank you, sir. Senator Gallego.
Thank you, Mr. Chair. Secretary Bessent, thank you again for being here today. We kind of touched on this earlier. In addition to being Treasury Secretary, you are serving as Acting Director of the IRS. So following up on Senator Kim's questioning, so you are fully aware that the President is suing your agency for $10 billion.
Yeah.
We would agree. Would you agree that $10 billion is a good sum of money?
Yes, sir.
Where would that be cut from? Let's say for some reason he actually wins that lawsuit. Where would that $10 billion come from?
Again, it would come from...
Process-wise. I'm not asking like your opinion whether it's right or wrong.
It would come from Treasury,
It comes from Treasury, which comes from the general fund,
the Treasury General Account.
so taxpayers.
Yes.
Thank you.
Part of the 440,000 taxpayers whose returns were leaked.
If the president, they're not suing, but if the president prevails in this lawsuit, he's going to be able to pocket that money. My question is the president, has anyone in the president's office talked to you about this lawsuit in any regard?
They have not, and the president has said he will donate the proceeds to charity. You may have missed that.
So no one at all has discussed this to you whatsoever?
No,
Okay.
sir, and the president said he will.
Have you received, I didn't ask any more questions. Have you received any advice from Treasury's legal division about how to handle this potential conflict?
This is a Justice Department matter. They represent Treasury in it.
Have someone from the Department of Justice actually come and talk to you saying that this is their purview and you need to stay out of it? Or who has discussed to you what is your role in this?
Our general counsel, who's sitting behind me, has told me that it is a Justice Department matter. The Justice Department defends Treasury in matters like this.
Okay, so it has been discussed with you. Do you have any final say at all in the process of this? Or is the DOJ just going to instruct you to cut a check and or settle, and you have no independence to actually make a decision whether or not the president deserves $10 billion?
Again, that is a DOJ matter.
And so the DOJ will entirely make that decision if and whether or not the president should receive $10 billion. You have no say at all.
Correct.
So you would just have to write the check if you were told to write the check.
Correct.
And you would write the check willingly if you were told by a DOJ to the president.
I will follow the law, Senator.
Okay. I mean, I think for many of us, this is very simple. And I think if this had been happening in any other countries, it would look an absolute, like a total shakedown of the American taxpayer. Are you also aware that President Trump has filed claims seeking $230 million from the Justice Department for investigations conducted during his previous candidacy?
I'm unaware of the cumulative number.
Okay. So if the president wins or settles these claims, that money will come also from the Treasury Judgment Fund, which you do control. Have you recused yourself from any decisions about paying the president on these claims?
Again, I'll follow the law, and I'm not involved with any of this. It stems from justice.
So you, even though the Treasury Judgment Fund is called the Treasury Judgment Fund, you have no control over the Treasury Judgment Fund.
We act as paymaster.
So you will sign it then?
Sorry?
You will sign the check then? If you're a paymaster, you'd be the person's signature is to the Treasury Judgment Fund?
I would assume it would be a wire transfer.
Yes, I'm assuming we're not that old school.
Yep.
But that being said, so you have no say in this whatsoever. You will only basically follow what the DOJ says, but you're the person that actually is the final person that pushes send essentially on the wire transfer.
Yes.
And even if you feel or that it is unjust, the fact that this president is basically plundering U.S. taxpayer dollars, you will still hit that send button.
Even if I believe that 6103, the IRS tax code, was violated and 440,000 taxpayers were leaked.
So
by Mr.
back
Littlejohn.
back to this other thing. So now, you do believe, though? I mean, do you understand why some of us see a problem with that? And let me ask just a very simple question: do you work for the president of the United States?
I work for the American people.
So can the president fire you?
Or he can.
He can fire you, correct?
Yes.
So isn't it a conflict of interest that you're going to be making these decisions and the president has full power over you?
I think you're confused, Senator. I am not part of the decision.
Well, you're certainly a person that send on the wire transfer, and I think that's why there's a lot of people that are actually
that is not part of
do
the
not
decision.
trust and do not trust the president's actually looking at his best interest.
I guess you were saying that
I'm controlling the time here.
obeying the law.
I'm controlling. You're not obeying the law. You're plundering U.S. taxpayer dollars. Plundering U.S. taxpayer dollars. Plundering taxpayer dollars. Plundering. Thank you. You'll back.
Okay.
Senator McCormick is now recognized.
Thank you. Mr. Secretary, welcome. In Pennsylvania, we're fortunate to have abundant energy resources, as you know, when you attended our summit, a skilled workforce, and world-class universities. The pro-growth policies of President Trump have enabled the Commonwealth to capitalize on this optimism and investor confidence, and it's attracted billions in investment and spurred growth. The working families' tax cuts are set to deliver more than $600 billion, a new relief to the middle class. And still, there's more to be done. Permitting reform, for example, would unlock billions, perhaps trillions of dollars that sits on the sideline right now. And so, Secretary Bessent, would you talk for a minute about permitting reform and how important those reforms are to unlock additional growth beyond the fantastic growth we've seen so far?
Well, as I've often said, Senator, the president's economic program is a three-legged stool: trade, tax, and dereg. And permanent reform is a very important part of the deregulatory agenda. And as we've seen, more supply also pushes down inflation and increases economic growth. I think it is the deregulatory agenda is the most unsung part of the president's agenda.
Yeah, I couldn't agree more with that. And there's going to be a big push, I think, from the Senate. There's already been legislation in the House, and Mr. Secretary, looking forward to your support for a permitting reform package, which I think could really stimulate further the president's agenda. Second question: the working families tax cuts also created Trump accounts, a new tool, creative, sort of really remarkable moment to support families and build wealth for the next generation. Can you talk just for a minute about the motivation for the program and what do you think this is going to be able to accomplish?
Senator, 38% of American households do not have any exposure to the U.S. equity market. So for the next 4 years, as a $1,000 seed investment is made to all newborns, it will bring them into the system and set them on a path. There can be contributions from family members, from employers, from philanthropies, from philanthropists, and we believe that over 20 states will do this. So it is going to, over time, allow all families to have a share of the great American innovation and growth economy.
You know, as people I meet in Pennsylvania hear about this and understand what it means for their kids, their families, I mean, it's a really incredible step, and I hope it's something we can really formalize and make part of not just this great administration, but future ones.
Well, I think too, Senator, and thank you for your leadership on this, that I've been a longtime advocate of financial literacy, and I think that this will be a real-time experiment in financial literacy as the families, as the children are able to look at their accounts on their phone and be part of this growth. I think that it will become very real and engaging for them.
Yeah, I agree. Final question. As you know, that the trajectory of U.S. debt is unsustainable. Net interest payments alone account for 14% of total government spending, and higher debt levels combined with high interest rates put upward pressure on the cost to service our debt. Further, 10 trillion of government debt will mature over the next year and roll over, which is a little less than a third, I guess, of debt outstanding. Can you discuss briefly the conditions in the U.S. Treasury market and the trends you're monitoring as we enter this period?
Senator, thus far the market has been very resilient. We've had some of our best auctions in a long time this year. We're seeing very good foreign demand. But as you said, the trajectory, we have to get it back under control. As I talked earlier, we need to get back to something with a 3 in front of it in terms of deficit to GDP. Reason I came out from behind my desk was I was worried that many people, especially as Vice President Harris was campaigning, wanted to go into a European-style social democracy, low growth, raise taxes, growth lower, more taxes, unsustainable debt. So that's why at FSOC, we are focused on growth as as desirable, but also a lack of growth as a financial stability risk.
Good. I don't have time for a final question, but I will just say I want to compliment you and the administration and OFAC in particular for the maximum pressure campaign on Iran and what that means for supporting freedom in Iran. So thank you for that. Thank you, your team.
Thank you.
Senator Blunt Rochester.
Thank you, Ranking Member Warren and Mr. Secretary, for your presentation of the 2025 annual report. Mr. Secretary, in your testimony, you talked about avoiding, quote, regulation by reflex and focusing on growth instead of reacting to every potential risk. You say FSOC is, quote, tuning out the white noise to concentrate on the issues that matter most. From my constituent calls and emails and conversations, I know for most families, they don't experience economic policy as white noise. They experience it through higher rent, higher medical bills, higher grocery prices, and just worrying that the next bill or price increase will push them over the edge. And it's why the Financial Stability Oversight Council's job is so important and why it can't wait until markets break. Its job is to spot problems early before families pay the price. Housing-related risks have been showing up for decades. On this committee, we've worked on the road to housing in a bipartisan way. And my first policy agenda, actually, as a senator, was focused on housing. So today, I want to understand what Treasury has actually done with these warnings. Secretary Bessent, in 2024, FSOC issued a report warning of weaknesses in non-bank mortgage servicers, companies that now handle most U.S. mortgages. Last year, on January 31st, 2025, GAO also warned that trouble at these firms could disrupt federally backed mortgage markets. So in light of these warnings by FSOC and GAO, what has Treasury done in response to address the risks in the housing market?
Well, that was the Yellen Treasury, and they said that everything was a risk. The Senator, that's why we are more focused, but we are very focused on the mortgage market through Fannie and Freddie and through the non-agency actors.
So is Treasury's position that this was overstated, this risk was overstated, or?
As I said in my statement, if everything is a risk, nothing is a risk.
But I'm specifically asking on
Yes,
the issue of housing.
Yes, I believe, and again, part of housing is being able to have tight spreads in the mortgage market, and we're at multi-year lows in the spreads versus treasuries, which tells me the mortgage market's very healthy, and we had the lowest mortgage rate in the past 3 years in January.
Okay, so the mortgage, you're saying it's healthy. I know foreclosures are up 21%. Mortgage delinquencies are 4-year high. I know all of that. But separately, your 2025 annual report notes that FSOC created a household resilience working group to identify early warning signs of household financial stress. It's my understanding that this working group was just created in December. Has it met yet? And what is expected? What is it expected to produce?
Again, it's exactly as it seems. It will be meeting monthly. It did not meet last month. And we want to look at the household balance sheets and understand, again, the question I got on consumer sentiment. Is it sentiment or is it reality? Where are the pressure points? Because we do want to help working Americans and spot problems early.
So do you know what what are the outcomes? What is it expected to produce? Or could you share that?
Well, as it hasn't started yet, Senator, I would look forward to sharing the work product with you as we move through the year.
I would hope there is a plan, because I know usually if you set up a group, there's a mission for the working group, there's a plan, a set of expectations. So look forward to hearing from you on that. If you were to, you mentioned in your testimony parallel prosperity, and you mentioned Main Street and Wall Street. If you were to rate how Wall Street is doing on a scale of 1 to 10, 10 being it's doing well, and Main Street on a scale of 1 to 10, what would you rate them?
I'm not going to speculate, but I will tell you the Wall Street Journal, not the Main Street Journal, criticized me for being a populist on my advocacy of Main Street. And look, Main Street got killed during the Biden administration. Wall Street did not. And
I only have 10 seconds.
We're trying to level
In my
it out.
10 seconds, I just want to say two things. Number one, this is now your watch. So I know there's been a lot of bringing up the Biden administration. This is now your watch a year later. And number two, families are truly hurting in this very present moment. So I look forward to working with you and finding out about particularly housing, because it's one of the number one issues in this country across the dais. Thank you, and I yield back.
Senator Moreno.
Thank you, Mr. Secretary. And also, thank you for being so accessible. You look at your predecessor, almost invisible. You go out and you're on TV, you're on the media to make certain that the American people and you're communicating with us on a regular basis. That's a refreshing change. I just have a question on your many TV appearances. I've noticed that you said that if the Democrats win, they'll do it again. Can you clarify what that means?
Yes, we saw a spending surge during the Biden administration, a blowout spending, and again, the deficit to GDP numbers blowing out, which according to MIT studies, the spending was responsible for the inflation surge. And at the same time, we saw mass unfettered immigration, 10, 15, 20 million illegal aliens coming into the country and depressing wages, taking low-end housing. And a study from Wharton showed that much of the low-end housing inflation, especially in rents, came from the 20 million new arrivals. The law of supply and demand that applies both for housing and for suppressing wages. So I would say, when I talk about that, there will be blowout spending, which will lead to inflation, and then the border will be reopened.
So clearly, this deportation effort, especially the self-deportations, is going to lead to lower housing prices, and we've already seen it, correct?
We have, and rental properties are ranked A through D, and D and C properties, we are seeing a substantial decrease. But what we're also seeing is because of the supply that is coming on, we are seeing a decrease in rents nationwide. As I said earlier, True Inflation, an agency that uses a basket of gathered real-time inflation measures is now below 1%.
Yeah, and speaking of that, so let's talk about that real quick because there's things that obviously federal policy impacts. And so an underlying cost to a lot of these key basket of goods is the price of gasoline. What's happened in the last 12 months?
Price of gasoline is down substantially nationwide, and we expect it to continue going down. Also, diesel, which is an input for farmers, for truckers. So energy feeds into everything, whether it is food cost, whether it is manufacturing, and again, more supply and being on the side of the energy industry has resulted in lower prices.
And the same thing can be said about the question you got at the beginning of this testimony about groceries. Eggs is an underlying ingredient in a lot of foods. What's happened to the price of eggs in the last 12 months?
Well, the price of eggs is down substantially. The president had to wear that for a few months, and then the price of eggs collapsed thanks to a lot of measures taken by ag under his direction. But of course, we don't hear about egg prices anymore. I will say in my hometown, Senator Scott's hometown, I've noticed that the egg surcharge has gone off the menu in the diner we both like.
Right. But there's some things that the federal government can't control. And we had a conversation about electricity prices. What state would you surmise? I'm not trying to quiz you here, but what would you surmise? Which state has the highest cost of kilowatt hour?
Well, California has the highest cost in everything, the highest taxes, the highest homelessness, but
believe it or not, Massachusetts wins this one at 31 cents per kilowatt hour. Ohio's at 17.
Well,
and so a lot of that, when you agree, Mr. Secretary, that a lot of that is state policies, the policies initiated by those states?
A huge amount of state policy, and whether it's Kathy Hochul, governor of New York, blocking pipeline, whether the decision in New York, they're sitting next to the Marcellus Shale, will not allow gas in, and the pipelines to New England or down from Canada, New England has made the decision to deindustrialize. Even when I was a college student, Connecticut was a hotbed of small manufacturing.
Well, and again, let me just say from an Ohio perspective, we're happy to provide low-cost energy to New England. Would you be surprised to know that Massachusetts also has twice the core inflation as the national average?
I wouldn't, and seeing the statistics for how many people are leaving the state, I understand why.
So in conclusion, you'd like to see states do more of the things that states like Ohio do and less like the things that states like Massachusetts do. And the last thing we want to do is take those policies and make them national. Would you agree?
I agree, sir.
Senator Alsop-Brooks.
Well, first, I want to thank Chair Scott and Ranking Member Warren for holding today's hearing. I certainly want to say to you, Secretary Bessent, thank you for being here today to discuss our economy, which is very much on the minds of Marylanders. Before I get to my questions, I want to make a quick comment on market structure legislation. Mr. Secretary, I speak for many of my colleagues when I say that we really want to get to a good bipartisan bill. We want to get it done. And I've appreciated working with your team, both during the Genius Act and market structure process, and really appreciate their attention to the issue of stablecoin paying yield and interest. I am confident, feel really good that we are going to get a bipartisan compromise that protects innovation and our community banks. And I really encourage your continued work on that issue. Now, the 2025 FSOC report confirms that 60% of small business loans and 80% of agricultural loans come from community and regional banks. And I am very proud to be partnering with Senator Hagerty. He and I have a piece of legislation to increase stability for businesses and their customers by expanding the deposit insurance available for business checking accounts. And so I join many Maryland business owners, credit unions, and small banks who believe a targeted expansion of deposit insurance could strengthen confidence in our financial system. The first question everyone wants answered about changes to deposit insurance, and it's a valid one, is who pays for it? I'm committed to working across the aisle to make sure that we get this right. And I asked your colleagues, FDIC Chairman Travis Hill, about cost and benefits in October. And Chairman Hill testified that a targeted expansion of deposit insurance would likely not increase deposit insurance premiums on small banks, and that any increased premiums on large banks would be small or immaterial. Do you agree with Chairman Hill? And more broadly, will you explain to the committee why a targeted expansion of deposit insurance can strengthen our banking system and boost business and consumer confidence?
Senator, I want to thank you for your partnership on Genius, on Clarity. I am hopeful that we can get that across the line this spring. And I've been an outspoken advocate for small banks because they are Main Street. We've seen 50% of our small banks disappear since the great financial crisis. And I believe that is one reason Main Street has lagged. And a large part of that is overregulation. But another part of this is moral hazard, that during times of financial stress, like in March 2023, there's deposit volatility, deposits flee banks because they believe that whether it's the 3 largest, the 7 largest banks, that there is no risk of loss. But if they stay with the community banks, and I've met personally with more than 200 community bankers, spoken to 1,000, but the 200 I've met with tell me they could have clients for 50, their families had them for 100 years, and the money goes to Wells Fargo and doesn't come back because exactly what you said, because there wasn't one business checking account that normally a payroll account. They say, I just can't lose this money. So we want, and once Wells Fargo gets it, they don't want to give it back, they offer. So, and as you get a decrease in deposits through the fractional banking system, then there is a reverse multiplier for lending. So the banks lower deposits, less lending available for Main Street. So I think that you and Senator Haggerty and I co-authored a piece in the Wall Street Journal. I think this is an extremely important piece of legislation. I would encourage your colleagues to pass it, and anything I can do to advocate for it, please let me know.
Thank you. Now, one other question here. Mr. Secretary, I want to thank you for your public support for community development financial institutions. And that said, I also echo Senator Warner's concerns about the congressionally appropriated funds being released. Maryland CDFIs include banks and credit unions that provide crucial funding for businesses, housing, and access to capital in underserved communities. So I want to specifically mention 2 CDFIs serving in Maryland that regularly participate in the Banking Enterprise Award Program, which allows them to provide credit and financial services in some of the most distressed neighborhoods in Maryland. The White House Office of Management and Budget has withheld the notice of funding availability for the BEA program since March of 2025, and that's 11 months. And so if the notice is not published, CDFI banks cannot apply for funding. So in March, you said CDFIs are a key component in supporting Main Street America. Do you still stand by this statement?
I am eagerly awaiting to have it released from OMB so that we can move it forward. As soon as it is released, we will follow our statutory duty and release to CDFIs. I'm also very happy to see CDFIs getting back to a core mission of prosperity and resilience for their community.
Thank you so much, Mr. Secretary.
Secretary Bessent, thank you for your leadership and your service to our country. You've talked many times about the ongoing burdens and effects of illegal immigration on our country as a result of the open border policies of the Biden administration. Last year, you said, quote, if you're here illegally, there's no place for you in our financial system. And you also announced that the Treasury Department would propose regulations to cut off federal benefits and tax credits to illegal aliens. And I wondered if you could give us a status update on those rules. How can we protect hardworking Americans from illegals who exploit our U.S. financial and credit system, and what are we doing about it?
Yes, sir. So we have moved forward on that. We have, through the regulators, had them double down on the KYC, know your client, and to make sure that everyone within the regulated banking system is legal. The other thing we have found out, and we saw it in Minneapolis as the hotbed of waste, fraud, and abuse, is outside of the banking system in money service businesses that a lot of money being wired out of the country. We don't know where. So this is a vulnerability we spotted in our system, and we are cracking down on that. We've also cracked down at the southern border because we found that lots of cartels are using or money laundering there, and we've done that in a targeted basis rather than increasing cost to all banks.
Is it your sense that it's working?
Yes, sir.
And what else can we do?
Look, we are considering a re-underwriting of the clients. And again, many people are familiar with what is called a suspicious activity report, a SAR. We find that many of those come in after the horse has left the barn. So we are encouraging banks to be more proactive, know your client, and re-underwrite.
Can you give us maybe an education a little bit about why all this matters? How does it affect my dad, retired factory worker in Fort Wayne, Indiana, the cost of illegal immigrants in our financial system and the credit system? Just give us a lesson on why it matters.
Well, again, it creates instability, and it also creates, we've seen, I cited it earlier today, we've seen there's a Wharton study that shows that it increases rents for working Americans. It takes jobs. So we could think that if we look at household resilience for working Americans, they got clobbered because all of supply and demand applies that for low wage earners, as you increase the workforce by 10, 15, 20 million in a very compressed period, then you're going to see the wage decreases.
Secretary, I wish that my parents would have had access to Trump accounts when I was born and set something like that up for me and my brothers. I mean, what a game changer that can be to help babies today, young kids today achieve the American dream, who grow up on the other side of the tracks and have something, have an option like a Trump account. I praise you and President Trump and this administration for what you've done to work with Congress to create Trump accounts. One gentleman, Brad Gerstner, who is a native Hoosier, like me, he grew up a very humble background and made it big, and now he's given back and funding Trump accounts for Hoosier kids who are born today. And I know it's going to make a big difference for the next generation of kids. One thing I worry about, though, are politicians down the road who want to regulate those accounts, or they want to put restrictions or rules that prevent those accounts from growing. What can we do to protect this great vision today to make sure that politicians later don't ruin it?
Well, I think it's two things. Mission creep, that we are committed to the lowest cost index funds, that it does not become something for social engineering, that it is return-based, low cost, broadly diversified, so that everyone owns a share of the U.S. economy. And Senator, I think the more that people become invested in these, the smaller the chance for meddling is, because I think they will be adamant.
Thank you for your leadership. I yield back.
Thank you. So for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Thursday, February 12th. Secretary Bessent, you have 45 days from that day to submit your responses to questions for the record. Thank you. Committee's adjourned.
Good.